Hello and welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Dave Gibb and Sean Ashton, both from Anchor Capital. Today we're talking JP Morgan Chase, one of the oldest financial institutions in the United States. Dave, good to have you with us today, as together with Sean, but maybe give us more details with regard to this bank.
So JP Morgan is the biggest bank in the US. It has assets of 2.6 trillion, which is quite a phenomenal number. There are four big banks in the US and JP Morgan is the biggest. So the next would be Bank of America, and then there's Citigroup, and then Wells Fargo. And JP Morgan is one of the banks that we really like. It's been run by Jamie Dimon since January 2006. And I think what makes it unusual is it went through the financial crisis and survived well. They didn't do any of the silly things that a lot of the other big banks did, like Bank of America and Citigroup. And it's a very forward-looking bank. It's well diversified, and we think it's an excellent investment and one of the big holdings in our offshore funds.
Why do you like it, Sean?
Guga, I think it's quite simple. I think this business navigated the storm very well. It's the one bank that has managed to consistently grow its book value per share and remain profitable throughout the financial crisis, where many other guys fell by the wayside or had to do very dilutive capital raisings. So they've grown their book value per share from, say, $36 to $57 from 2008 till now. And that's about $60 billion worth of incremental growth, despite paying $40 billion worth of fines. So this is a very strong business that has navigated the storm well. And I think it's trading at a well below trend return on equity. So the return on capital and profit potential is below where it can get to. And at the same time, the market's putting a reasonably low multiple on those earnings. So it's about a 4 to 11 PE. But this is at a sub 10% return on equity, where it used to trade in the teens. And we think that there's good reasons to believe that there will be a recovery in banking profits in the United States, specifically over the next number of years.
Before we get into market share in the US, that PE, how does it compare to its counterparts?
So it's probably slightly cheaper than some of the better banks out there. If you look at something like Wells Fargo, it's probably trading at a forward 14 PE. It generates higher returns on capital, but probably doesn't have the same upside potential in its ROE as what something like JP Morgan does.
Optimistic about the US, Dave? Tell us more about the market share that they can gain there.
Well, I think what we notice is that the top 5 banks in the US have got a massive share of assets. So they've got about 46% of banking assets in the US. And what we've seen over a long period is that the big banks are getting bigger. So the smaller banks, and often they refer to as community banks, they have assets of $10 billion and less. There are now 6,000 of those banks. And if you go back 20 years, there were more like 10,000 of those banks. So the bigger banks are taking market share from the smaller banks. So that's the one angle, is the gain in market share. Then the other angle is that the economy continues to improve in the US, and that loan growth is pretty good. So JP Morgan is gaining share in most of their areas. They're gaining share in deposits, credit card sales, gaining share in investment banking fees as well. They have the #1 market share in that area.
What's its competitive advantage, though, in those particular areas?
Well, I think the thing is, scale is important in banking. And since the financial crisis, the costs of regulation have mounted. So it's made it smaller for smaller banks. And hence we've seen the shift in market shares to the bigger banks. So scale is important, and they can provide an all-encompassing service to the big corporates. So, not only can you look after the CEO in terms of their wealth management, but you can also do, you can do investment banking deals with the CEO's company or whatever. So you provide a full suite of products. Yep.
What about its net interest margin, Sean?
So I think this has been an industry theme that's actually been a drag for the banks for the last probably 5 to 10 years, and that interest rates in America have come down significantly over the last 10 years or so. There's been a structural reduction in inflation, and the federal funds rate has come down. And this has made it much harder for banks to earn returns, because in America they tend to lend on the basis of what the 10-year treasury yield is trading at, in terms of if you're making a loan, certainly to a consumer or a or a corporate, it's not like in South Africa where it's linked to the prime rate. It tends to be linked to the long end of the bond curve. So those rates have come down significantly, which has meant that the net interest margins have come down. But we think you're at a point in time now where structurally interest rates are unlikely to fall further in America. In fact, we're probably into a hiking cycle now, which will drive upside in bond yields, and at the same time we think that will turn the tide for net interest margins for banks. And that's very good for the return profile of banks improving over the next few years.
What about the split of income for JP Morgan?
So it's a broad mix. I mean, you've obviously got consumer banking in the mix there. You've got investment banking, but I think it's fairly broad spread. There's no outstanding features that I'd want to discuss there.
So basically, this obviously attributes to the income earning potential of the group, and as you mentioned, diversified streams there. Dave, I take it another reason why you like it?
So, obviously half of their earnings are coming from net interest income, and the other half is not related to interest, and those will be all the different fees that they generate from asset management and whatever. So they're doing very well in asset management. They've been gaining share. They've had very good performance in that area. And then I think if you combine those sort of almost annuity type businesses with the interest part of the business, we think that the net interest contribution to profit can start picking up again. They've been almost overly reliant on fees up to now for the last few years. So we think that can pick up. I think, and one of the things to remember with JP Morgan, if you go back to when Jamie Dimon became CEO in January 2006, and you look at the market shares in credit card or deposits or whatever, those market shares have actually improved dramatically. So over almost 10 years now, he has had a dramatic impact on the bank. And I think the important thing is to buy a bank that's run by a banker, because there are too many banks that are not necessarily always run by bankers. And so when times do get tough and the risks pick up, you just want to make sure you run, your business is run by a banker.
So we know you like the leadership, but to go back to valuations for a moment, we saw the graph on screen. The price to book values in the US have certainly taken a bit of a knock.
And they're a lot cheaper than South African banks, if you think about it. So many South African banks are trading at 1.5 to 2 times price to book. JP Morgan, as an example, is trading at about 1.1 to 1.2 times book. And it's also worthwhile remembering, yes, return on equity is a lot lower than what you're getting in South African banks. South African banks are probably 15 to 20%. JP Morgan's running at about 10, can potentially get to 15, but your cost of capital is much lower. So you might well argue that the price to book multiple that you would pay for JP Morgan could well be similar to a South African bank, and it certainly isn't. And I think the potential for net interest margin upside and relative improvement in returns is higher in the American banks than what it is in the South African banks, we would argue.
What about exposure to other markets? I know that it's a strong focus on the US, but in other geographies, does JP Morgan have a stance there?
It does have a stance, but it's predominantly a US bank. So a lot of the investment banking work is done out of the US. But I think in a way, it's nice to be in the US market. It's a big market and scale counts. So we find that we actually prefer American banks rather than the more global banks. I mean, Citigroup in a way is more of a global bank. So, they have retail banking services in many countries around the world, whereas JP Morgan still is very much US centric, and we prefer that.
For the person who might be looking to buy this, I take it the outlook is clearly for the long term then?
Correct.
Sure.
Correct. So we are saying that we think the cycle for banking is good, particularly for US banks. The expectations are not that high. The companies have been run with the Federal Reserve looking over their shoulder after the 2008 financial crisis. So we think that that the outlook is good for potential, share price appreciation.
That's an important point. I think the risks in these businesses are very different to what they were 5 or 10 years ago. Leverage levels have come down significantly. If you think back to the crisis days, Lehman Brothers had 38 or 40 times leverage on their balance sheet. Most of these businesses are now more or less 10 times geared, which is actually quite low by historical norms.
time to ask our experts the all-important question, buy, hold or sell JP Morgan. Dave, let's start with you. Buy, hold or sell?
No, it's definitely a buy for me. So in the unit trust that I run, the Anchor Worldwide Flexible Fund, it's our second biggest holding. And I've been buying obviously for a period now. I've been buying for the last 2 years, but I have still been buying up until recently. So I still think that the share price appreciation potential is very good, particularly in a market that is not particularly cheap. So I find the banks offer much better relative value than many other sectors.
Sean?
It would be a buy for me as well. We've got it in our offshore mandates outside of David's funds. In our segregated portfolios offshore, we own JP Morgan in fair size. Even in our domestic unit trust, where we have the ability to take 25% offshore, we've got a chunk of this particular asset in that holding.
So for the retail investor, I take it a unit trust as well is the ideal way to get access to JP Morgan.
Sure.
Perfect. We'll leave it there. Thank you so much for your time today, gentlemen. Well, I'm afraid that's it from us for this week. A big thank you to both my guests, Dave Gibb and Sean Ashton, both from Anchor Capital, giving us a buy recommendation on JP Morgan. Thank you for joining us. Catch us again next time where we talk more stocks.
For the latest fundamental and technical analysis delivered right to your inbox, log on to talkingstocks.co.za and sign up for the Talking Stocks newsletter.